Today, we're going to unpack a really dramatic turnaround in the Indian stock market. I mean, after 3 straight days of losses, the market didn't just get back on its feet. It absolutely roared back to life. So, what flipped the switch? Let's get into it. So, just before this big rebound, the mood on Wall Street was, well, pretty gloomy. For 3 trading sessions in a row, the markets were in the red. Investors were just kind of watching and waiting. And honestly, the trend was pointing one way, down. And then, all of a sudden, everything changed. The Sensex didn't just recover a little bit, it launched. From its lowest point of the day, it skyrocketed by a massive 748 points. This was not a gentle recovery, folks. This was a powerful surge. So what on earth happened? You have to wonder, right? How does a market go from being so pessimistic to practically euphoric in a single day? Well, the answer actually starts thousands of miles away. Okay, first things first, the global trigger. To really understand this local rally, we've got to look at a key decision that was made by the world's most influential central bank. The initial spark was this. The U.S. Federal Reserve announced it was cutting its key interest rate. Now, this single piece of news sent these positive ripples all across global financial markets, and India was perfectly positioned to catch that wave. Now, in finance speak, this is what's known as a dovish stance. So when a central bank goes dovish, it's basically trying to kickstart the economy by making it cheaper to borrow money. For investors all over the world, this rate cut was like seeing a giant green light flashing go. But look, a global signal is one thing. You need the right local conditions to turn that little spark into a full-blown fire. So let's look at how the drivers right here at home provided the fuel for this rally. And inside India's market, there were 2 major forces ready to go. First, a classic investor move called bargain buying, and second, just a huge amount of cash sitting on the sidelines, waiting to be used. Just think of it like a big sale at your favorite store. You know? After 3 days of falling prices, a lot of really good stocks suddenly looked a whole lot cheaper. So when that positive news from the US hit, investors who had been waiting saw the perfect opportunity to jump in and buy at a discount, and that created this huge surge in demand. But where did all that buying power come from? Well, get this. In the month of November alone, a staggering 29,911 crore rupees had poured into mutual funds. That is an enormous pool of cash that was just sitting there, waiting for the right moment. So you see, this rally wasn't just built on good feelings. No way. There was real, hard cash ready to back it all up. This massive inflow from mutual funds provided the financial firepower needed to keep the rally going and push the market way, way higher. Okay, so we know why the market went up. But who were the biggest winners? Let's take a look at the day's scorecard to see which stocks and sectors really led the charge and which ones got left behind. As you can see, the gains weren't spread out evenly at all. In the winner's circle, you've got heavyweights like Tata Steel and some newer players like Zomato. But on the flip side, some really big names like Asian Paints and Bajaj Finance actually missed out on the party. It just goes to show you that the money was flowing in very selectively. And if we zoom out to the whole sector level, the story gets even clearer. Sectors like auto, metals, and banking were absolutely the leaders for the day, just riding that positive wave. But not everybody joined in. The Nifty Media index actually fell, which really shows you that split in investor confidence. And this is important. It wasn't just about the biggest blue-chip companies. The rally had real breadth. But the midcap and the small-cap indices saw solid gains. And that suggests that confidence was returning to the broader market, not just that top tier. All right, so let's connect all the dots and take a look at the big picture. How exactly did a decision made in Washington, D.C. end up creating a buying frenzy on Wall Street? It was really a perfect chain reaction. Step 1, the U.S. Fed cuts rates. Step 2, this boosts investor confidence all around the world. Step 3, back here in India, investors see those cheaper prices and start bargain hunting. And finally, Step 4, all that cash that was already in the system provides the fuel to turn that buying interest into a full-blown rally. You know, if you take away just one thing from all this, let it be this. A really powerful global signal was massively amplified by some very favorable local conditions. It was the perfect storm. The Fed's rate cut, combined with lower prices and a huge supply of cash, all working together to create this major market rebound. And that leaves us with a pretty fascinating thought to end on. This whole event is just a powerful reminder of how interconnected global finance really is. It really makes you wonder, in a world where a decision in one country can so dramatically shake up another, how much is any market truly in its own control? Something to think about. Thanks for joining us.